Welcome to this educational video on the ProShares UltraShort QQQ ETF, ticker symbol QID. First, let's define what an ETF is. An ETF, or exchange-traded fund, is a type of investment vehicle that tracks a specific index or asset class, such as stocks, bonds, or commodities. ETFs are similar to mutual funds in that they offer diversified portfolios. But unlike mutual funds, ETFs trade on an exchange like a stock and can be bought and sold throughout the day. Now let's delve into the specific details of the ProShares UltraShort QQQ ETF. QID is a bearish ETF that aims to provide returns that are -2x the daily performance of the NASDAQ-100 Index. This means that if the NASDAQ-100 Index goes down 1% in a day, QID is designed to go up 2%. On the other hand, if the NASDAQ-100 Index goes up 1%, QID is designed to go down 2%. QID is classified as an inverse ETF, meaning it uses financial instruments such as futures contracts and options to achieve its desired performance. Inverse ETFs are often used as a hedge against long positions or as a way to profit from market downturns. It's important to note that inverse ETFs are not suitable for all investors and can carry additional risks. These risks include the potential for significant losses if the market moves against the ETF's intended direction and the possibility of increased volatility due to the use of leverage. Now let's discuss the holdings of the QID ETF. As of December 2020, the top 5 holdings include Apple, Microsoft, Amazon, Facebook, and Google parent company Alphabet. These companies make up a significant portion of the NASDAQ-100 Index, which the QID ETF tracks. The QID ETF has a relatively high expense ratio of 0.95%, which is the annual fee charged by the fund to cover its operating expenses. It's important for investors to consider the expense ratio when evaluating an ETF as it can impact overall returns. In terms of performance, the QID ETF has had a volatile history. In 2020, it saw significant gains as the NASDAQ-100 Index experienced a downturn due to the COVID-19 pandemic. However, in 2021, the NASDAQ-100 Index has recovered and the QID ETF has seen losses. It's important to keep in mind that the QID ETF is designed to perform well in bear markets, but may not perform as well in bull markets. Now let's discuss who might consider investing in the QID ETF. As previously mentioned, inverse ETFs like QID are often used as a hedge against long positions or as a way to profit from market downturns. Investors who have significant exposure to the NASDAQ-100 Index or technology stocks in general may consider using QID as a way to mitigate potential losses. However, it's important to remember that inverse ETFs are not suitable for all investors and should be carefully considered before making an investment decision. It's always recommended to consult with a financial advisor or professional before making any investment decisions. In conclusion, the ProShares UltraShort QQQ ETF, ticker symbol QID, is a bearish ETF that aims to provide returns that are -2x the daily performance of the NASDAQ-100 Index. It's important to keep in mind the potential risks and volatility of inverse ETFs and to carefully consider if QID is suitable for your investment strategy. As always, it's recommended to consult with a financial advisor before making any investment decisions. Thank you for watching.